Hey, this is Marketplace Tech Bytes, a weekly roundup of some of the big stories making headlines in the tech industry, and maybe some you might have missed. I'm Megan McCarty-Carino. On the show this week, OpenAI just closed a massive funding round. Biotech companies are getting big investments again. And a private equity firm has taken a majority stake in Surescripts. To discuss all this, I'm joined by our regular contributor, Christina Farr from Manad Health. Welcome, Christina.
Thanks for having me, Megan. Excited to dive in.
So as always, we're going to kick things off with our bite of the week. This is a number that gives us some insight into our top stories. So Christina, what is your number this week?
So we've been talking a lot about AI of late, Megan. And so I wanted another AI number.
All right.
Alphabet investing $3.3 billion into the state of South Carolina for 2 new Google Cloud data centers. And what I think is interesting about this is it's really about this big bet into AI infrastructure, just given the growing demands that the company is seeing for machine learning and data processing and all these AI-driven applications. And I think another boon for domestic innovation for the state. So just interesting to see that, not surprising. And we've been, seeing a lot of stock fluctuations in light of all of this AI stuff that we're going to be talking about today.
Right. Well, speaking about big bets on AI, we got a big bet on OpenAI this week. They just closed their most recent funding round, and it was one of the biggest in history. They raised $6.6 billion. The company is now valued at $157 billion, which is about double what it was just earlier this year. I mean, Christina, what do you make of this?
So I will tell you the conversation I had last night with my husband as we were falling asleep in bed. And he said to me, because he's in the tech industry, so we have these conversations all the time. He's like,
so sexy.
I know. He said, if I had joined OpenAI 5 years ago, given what their valuation was, I would have made $40 million. And we were both just sitting there wide awake for a while, like, I wonder how many people are going to stick around at this company, because if you joined OpenAI early enough, given this valuation, you are a very rich person, at least on paper at this point. And I'm sure there are secondaries as well where people are taking money out. So what a wild run, and how fortunate to have been a part of it.
Well, so interesting that you bring up, getting in on the ground floor of OpenAI, because the sort of exodus of a lot of some of the, co-founders and, early folks at the company has been kind of making headlines over recent months. Last week, we saw the departure of the chief technology officer, Mira Murati, as well as some major researchers. At this point, we are down to, I think, 3 of the original 11 co-founders of the company still there. I mean, what is going on?
Yeah, I think Elon Musk shared kind of a funny meme of just like all the people around Sam Altman, and now it's basically just Sam Altman.
Yeah, it's like a Back to the Future thing where just Sam Altman remains in the photo. Yeah.
Yeah, I mean, I'm sure that there are just dynamics and politics at play that you and I could never even imagine at this company. But it's probably also that if you are a leader at OpenAI, you are just like we talked about, you have made a lot of money.
Yeah.
And so do you want to continue on at this company at this stage, or do you want to retire or do something really interesting and innovative, because you could do anything at this point? And so, it's sort of a good problem to have and a bad problem to have for companies. And it's a reason why you see sometimes kind of early leaders taking off. And I wouldn't be surprised too if some of these people just kind of like start new things, because they're probably seeing what's at the forefront right now of AI. And I'm sure there are problems that OpenAI can't solve. So in many ways, it's healthy for the ecosystem, because you get great people kind of, able to start new things. And that's what you need with these exits and these sort of moments of growth.
Yeah, clearly a time of big transformation for this company, of course, with all of this big investment. Those investors want to see some returns on those investments. So they have this plan to transition from a capped profit company to a for-profit company in the next couple of years. I'm sure, That will be a transition. But we want to move on to another part of the tech economy now where money is also kind of freely flowing, and that is biotech. This was an industry that saw massive investment during the pandemic. It hit record amounts in 2021. And since then, things kind of dropped off, but we saw some new data from Silicon Valley Bank, actually, reported in the Wall Street Journal, and shows this industry is back. Tell us what's going on there.
Yeah, I mean, there are always just cycles with these things of just like a lot of peak enthusiasm and then moments where, you don't see it as much. And I definitely for healthcare, the pandemic was that moment.
Right.
And I think we just got a little bit too hyped up that healthcare was going to just fundamentally be different in the future. And, then we had this like trough of disillusionment in the several years that followed when healthcare, for the most part, just kind of returned to how it was pre-pandemic. But I think biotech, is a little bit different. I mean, it's a super regulated area of life
Mhm.
sciences, involves kind of the process of coming up with new drug targets. And I think what's interesting about this is it's sort of like a kind of deep tech that I think you're seeing a return to across Silicon Valley. People wanting to do challenging and harder and fundamentally more binary things. Like it either works or it doesn't. Like the science works. And if the science doesn't work, that's the end of the company. But if it does work and you can kind of beat the odds, then there's a path for reimbursement. There's a path to make money. And that I see now as being more interesting to investors than just pure software plays that feel a little bit more repeatable, but there's just a ton of competition in the market. With biotech, there certainly is competition, but it just runs a very different course, runs a very different trajectory. These companies tend to IPO earlier, as just one example. It's just a fundamentally different thing.
Hmm.
I'm not surprised to see that there is more of a return to it now.
The dollar amounts are kind of commensurate with 2021, but we're obviously in a very different macroeconomic condition, very different market conditions now. How is this time different than what we saw in 2021 in terms of kind of what investors are looking for, what kinds of companies they're going into, what kinds of scrutiny they have for those companies?
Yeah, things have definitely changed. It's been interest rates that have been the primary contributor. And when interest rates are super low, then VCs tend to be more willing to take bigger risks, and they know that they can continue to raise funds themselves. And now, it's not the case. We're not in this kind of era of really low interest rates. So I see investors looking for profitability a lot more. I see them looking for bets that, again, maybe there's more technology to it. Maybe it's a little bit more binary, but if it does work out, that there is a pathway to make money and that pathway is clear, and many companies have done it before. I see funds looking to back more experienced founders these days versus first-time founders. And I'm seeing valuations come down as well. Valuations are pretty crazy. I'm just going to be honest with you. And in the pandemic, and I was working as a VC at the time, so I saw it firsthand. I see valuations normalizing a little bit more now, and I think that's a good thing.
I wonder if some people are also looking at a cautionary tale that has been in the headlines recently with 23andMe. I don't know if that counts as a biotech startup, but it certainly was kind of a darling in the venture space and of markets. Kind of hit this peak back in 2021, I think. Recently, all the board members resigned because the company cannot really put forward a business plan to show how it's going to make money. So, I mean, surely a bit of a cautionary tale there.
Yeah, I followed this company very closely from the early days, and there was a lot of enthusiasm about the potential at one point in time. They were doing these at-home tests for people to find out about their genetics, both kind of ancestry and also
Right.
kind of health testing as well. And there was a lot of promise that potentially some of the data that 23andMe collected could be used to develop new drugs. That this would be a really interesting source for pharma companies to make something new out of. And they had amazing deals for a long time that propped up kind of the company's valuation. But I think the fundamental challenge is that 23andMe was a testing company. And for tests, you have to be able to ensure that they are repeatable.
Hmm.
Their test was a one-time test, and they really couldn't figure out ways to turn that into something that people kept coming back and
Mm.
wanting to pay for. And then you hit this problem of just like, there's only so many people that want to get this test.
Well, now to some more healthcare news. This week, we heard the private equity firm TPG has bought a majority stake in Surescripts. Tell us more about kind of the market position of Surescripts and what this means for the many consumers who might cross its path.
This is big news. And I think outside of the kind of niche healthcare industry, I did not see a lot of people paying attention. Surescripts has over 90% of all online
Wow.
prescribing, that whole market. So whenever you get a prescription filled by your doctor and it's done electronically, that is Surescripts that is behind that. So to me, it's big news that it's been sold to private equity. Yeah, I haven't really seen much innovation. I've seen a couple of companies. One I invested in, Photon Health, that has tried to take on Surescripts.
Hmm.
But it has been very, very challenging because of this reason. There is, they own kind of more than 90% of the market. So I think that's going to open up a lot of interesting opportunities in the world of pharmacy. It's a really tough area to crack into, but the need is absolutely enormous, and drug pricing just continues to spiral out of
Right.
control. So love to see any movement happening in this space.
I mean, what are you excited about? What kind of developments might we see?
Well, just one of the things, I've been using this company Photon now for a few years, and I get my scripts straight to my phone. So if a doctor prescribes it to me, I get the link on text
Ah,
message, and then I can move it to any pharmacy I want at any point in time. If it's not in stock, I just move it to somewhere else that
hmm.
does have that prescription in stock. So I think I like the idea of pharmacy becoming a lot more consumer mediated.
Oh my gosh,
I
yeah.
love that. And I think healthcare in general is going in that direction, or I'd like to see it go in that direction where consumers can take a lot more control. We should be able to pick where we want to pick up a script. We should be able to see the physician that we want to see, and we should own our own information, like bottom line. So I think that is the most important trend coming out of the healthcare industry. And I love companies that facilitate that.
All right, you have gotten me excited about this. Christina Farr at Manat Health, thanks so much for joining us.
Thanks for having me.
And thanks to all of you for joining us for Marketplace Tech Bytes Week in Review. Jesus Alvarado produced this episode. I'm Megan McCarty-Carino. This is APM.